Welcome to the Westside Investors Network, WIN, your community of investing knowledge for growth. This is the Real Estate Professionals Investing Podcast for real estate professionals by real estate professionals. This show is focused on the next step in your career, investing. Thank you for listening. And please, if you like our content, rate us on your podcast provider. Just a quick disclaimer, the views and opinions expressed in this podcast are for educational purposes only and should not be construed as an offer to buy or sell any shares or securities, make or consider any investments, or take any other action.
Welcome back to another episode of the Deal Deep Dive segment on the Westside Investors Network podcast. I'm your host, Trent Werner. In this segment, our featured guests will share their unique stories on a specific deal they've invested in. We will dive deep into finding the deal, financing the deal, writing an offer, and the due diligence. Do us a solid and smash that subscribe button, leave us a rating, and share this episode. And now, let's dive deep. Welcome back to the Westside Investors Network podcast. I'm your host, Trent Werner. On today's episode, we're joined by Mark Podolsky of the Land Geek. Mark is known as the Land Geek because he's been investing in selling land since 2000. He was able to replace his full-time job back in the day after just his first 12 months doing this. And he is going to share the steps and the process of which it takes to become a land investor, not only land flipper, but creating cash flow monthly from finding deals that you're buying for pennies on the dollar. Now let's welcome Mark Podolsky. All right, the Westside Investors Network podcast is back with the Land Geek himself, Mark Podolsky. Thanks for joining us.
Trent Werner, thanks so much for having me.
I told Mark this before we started recording. I am kind of a fanboy, so I'm super excited for our conversation today. Mark has a great book that we actually have a link that our listeners can go check it out and get it. So thank you, Mark, for that. Mark, for people that don't know who you are, you want to tell us about Mark Podolsky and the Land Geek himself?
Yeah. So if we rewind the tape to 2000, I was a miserable, micromanaged, 45-minute commute to work and back investment banker, specializing in mergers and acquisitions with private equity groups. And Trent, it got so bad for me, I wouldn't get the Sunday blues, anticipating Monday coming around. I'd get the Friday blues, anticipating the weekend going by really fast and having to be back at work on Monday. So my firm hires this guy, and he's telling me that as a side hustle, he's buying up raw land, pennies on the dollar at tax deed auctions. He's flipping them online and is making a 300% return on his money. And Trent, I'm looking at companies all day long. And a great company, great, has 15% EBITDA margins or free cash flow. Average company's 10%. And I'm looking at companies all day long, less than 10%. So I'm from Missouri, the show me state, and I don't believe him. So I've got $3,000 saved up for car repairs. I go to New Mexico with him. I do exactly what he tells me to do. I buy 10 half-acre parcels, an average price of $300 each. I flip them online, and they all sell for an average price of $1,200 each. It worked, 300%. So I took all that money, went to another auction where I lived, and this is in Arizona. And there's, it's 2000, there's no one in the room. And I'm buying up lots of acreage for nothing. And I sell all that land, I made over $90,000 cash. So I go to my wife, and she's pregnant. I said, honey, I'm going to quit my job and become a full-time land investor. And she said, absolutely not. So I said, okay. So it took 18 months for the land investing income to exceed the investment banking income. And then I quit. I've been doing it full-time ever since. I've done over 6,500 land deals now and counting, and still absolutely love it.
So for that first deal, you said it was 10 half-acre parcels for $300 a piece?
Yeah.
So that's just not possible anymore, right?
No, you can still get properties cheap.
So you said you were in Arizona at the time, but this one was in New Mexico, is that right?
Yeah, that was in New Mexico. I live in Scottsdale, Arizona.
Okay.
Yeah, but that auction was like Southern Arizona.
Okay.
Yeah.
So I know you had a coworker or colleague that was doing this on the side that introduced you to it. Was there anything or any research that you did by yourself after, he explained what he was doing?
Well, yeah, I mean, then I came up with my own way of doing it. So we sort of came up together. He was more into velocity of money and flipping land for cash. And I thought, well, that's a job, and I don't want a job. And so I thought, why don't I owner finance and create cash flow on these pieces of land? And so Trent, if you want, I can walk you step by step through the exact model and how I do it.
I would love it.
Okay, so we'll use you as your case study. As case study. So where do you live?
Portland, Oregon.
Portland, Oregon. Okay. I think now I'm thinking of Portlandia. And is it organic? Never mind. Anyways, we'll assume that you own 5 acres of raw land in Colorado and that you owe, let's say, $200 in back taxes on that 5 acres. And so you're essentially advertising 2 important things to me. Number one, you have no emotional attachment to the raw land. You're in Oregon, the property's in Colorado. And number 2, you're distressed financially in some weird way. Because we don't pay for things like our property taxes. We don't value them in the same way. As a result, the county treasurer keeps sending you notices saying, Trent, you don't pay your property taxes. You're going to lose that property to a tax deed or a tax lien investor. So all I'm going to do is look at the comparable sales on your 5-acre parcel for the last 12 to 18 months. I'm going to take the lowest comparable sale. Let's say it's $10,000. And then I'm going to divide by 4. And that's going to get me what Warren Buffett would call a 300% margin of safety. So I'm going to send you an actual offer for $2,500. Now you accept it. Why? Because for you, $2,500 is better than nothing. Mm-hmm. In reality, 3 to 5% of people are going to accept my quote unquote top dollar offer. But now that you've accepted it, I have to go through due diligence or in-depth research. I have to confirm you still own the property. I have to confirm back taxes are only $200. I want to make sure that there's been no breaks in the chain of title, no liens or encumbrances. I have this large property checklist, due diligence checklist. I outsourced to my team in Jamaica. It costs about $11, and they're connected to an American title company. Now, if I was investing more than $2,500, I would just close traditionally through a title company. Let's say $5,000. I would close through a title company. But this is only $2,500. I'll take a little bit of title risk. We'll assume everything checks out. I'm going to send you a check for $2,300. I'm going to send the treasurer a check for $200. I own it free and clear. And now I'm going to sell it and I'm going to make it cash flow like a rental home in 30 days or less. And so, Trent, I have a built-in best buyer. I know you know who it is.
I don't.
It's the neighbors.
Oh, yeah.
So I'm going to send out neighbor letters saying, hey, here's your opportunity. Protect your privacy, protect your views, know your neighbor. So oftentimes the neighbors will buy. Now, if they pass, I'll go to my buyers list. The buyers list passes, I go to a little website you may have heard of. It's called Meta or Facebook, buy-sell groups in the marketplace. And then I'll go to the lands, land.com, landmodo.com, landandfarm.com, landsofamerica.com, landcentury.com, landflip.com, landhub.com. These are platforms where people buy and sell raw land. But the secret is in the pricing. So all I'm going to ask for is a $2,500 down payment on your 5-acre parcel. And then I'm making a car payment. Let's say $399 a month at 9% interest for the next 60 months. So I get $2,500 down, I get my capital out. Now I'm getting $399 a month at 9% interest for the next 60 months. Trent, no renters, no rehabs, no renovations, no rodents. And because I'm not dealing with a tenant, I'm exempt from Dodd-Frank, RESPA, and the SAFE Act, all this onerous real estate legislation. So then it's a simple game. Can I create enough land notes where my passive income exceeds my fixed expenses? And now I'm working because I want to, not because I have to.
So, Mark, I have a bunch of questions after, going through the process with you. First question is, how did you identify this potential deal in Colorado? What drew you looking for a deal to Colorado?
So it's county research. So I'm going to go on a website like landmodo.com, and I'm going to see where are the other land sellers being successful. So imagine that you and I are going to go fishing together on the lake, and we see 10 boats on one side of the lake, and they're all catching fish. And then we go to the other side of the lake, we see there's 3 boats over there, and they're not catching any fish. Where do you and I want to go?
With the 10 boats.
We want to be the 11th boat, even though it seems counterintuitive. We want to go where there's no competition. But no, we want to go where we know definitively there's a market. And so that's how we're going to start our county research, is we want to know definitively there's a market there and that other land sellers are there being successful.
And then from from there, after you identify a market, then that's when you look for people that are in the situation that I'm in this example, correct?
Right. So I'll go to a website like datatree.com. If you want to save some money, go to datatree.com/the Land Geek, and you get a list, right? And so from that list, I'm going to basically scrub that list, and I'm going to take out all the residential homes, commercial properties, industrial properties, and I might do it by use code, say VL for vacant land. So now I have all the vacant land in that county. Then I'm going to sort it by assessor's parcel number or neighborhood. And that from there, I'm going to price it because I don't want to send somebody with 40 acres the same offer as 5 acres. That 40-acre person is going to send me back glitter in the mail. So I want to do that as well. And then I'm going to track my response rate. So I know that if 3% or under 3% of people respond to my offer, well, I came in too low. And if over 5% respond to my offer, I'm gonna have to retrade. I kind of came in too high. So I want to know my numbers and my metrics in that situation. So I really get my pricing down.
And when you are scrubbing the list, are you looking for, I guess, a certain size piece of land that you target, or does the size not matter in your business at this point?
Yeah, size doesn't matter. And I'm not saying that to be cheeky. I mean, it's literally because I want to buy an asset at any asset, 25, 30 cents on the dollar. So the size is really not going to be relevant. Now, certainly there are certain parcels that I have an affinity for. Like I think 40-acre parcels do really well for whatever reason, but I'm not going to just target that.
Right. And then I guess do you dive into the land, the zoning and the codes and everything for these parcels after you've identified them, or do you even care about that?
I'm not going to do due diligence until I get the offer back, and then I'll do it. Because if I get a 1,000, acre or 1,000, like a 1,000 parcel list, that's a
Yeah.
lot of due diligence before I spend any money.
Right. Okay. That makes sense.
Yeah.
And so I guess in this example, let's say I live in Oregon still, you're in Arizona, but we're looking at a piece of property in Colorado. How do you find a new market, let's say in Delaware or Maine? Or how are you identifying markets that aren't even remotely close to where you're at or where this seller is at for this deal?
Yeah. Again, I'm going to go to a website like landmodo.com. And then based on my personal budget, I want to know I can buy 5 to 7 parcels there. So then I'll just do some math and just figure out, okay, I know this is a good area because there's a market here, and can I afford it? And
Mm.
so that's how I'll go ahead and pick my area.
I guess, sorry, let me rephrase that. So I'm in Oregon and I want to do land deals. How do I choose a state to begin with? Sorry, not like a specific market, but can I just say I want to go to these 5 states, or are there areas of the
Well,
United
yeah,
States
I
that are
mean,
better?
yeah. I mean, Trent, let's face it. Nobody wakes up and thinks themselves, boy, I'd like some raw land today in Iowa, unless you live in Iowa.
Right.
So we want to go to the Sunshine States. So the Southwest, New Mexico, Texas, Colorado, Arizona, Nevada, a little bit in the Northwest, Oregon, Washington, California, Florida, parts of the Midwest that are treed. That's going to be our biggest buyer pool. It's not to say you can't do deals in those other areas. It's just if we can get deals in those areas, and there's tons of them. I mean, Texas alone, it's so big. You and I would run out of money before we run out of deal flow.
Right. Okay. And then in the example that you used, you see it, $3.99 a month, 9% interest for 60 months. And that, how is that based on what price are you selling? Is that the $10,000 price that you've identified to begin with?
Okay, so I'm gonna really look at a 1,000% markup because of time value of money.
Okay.
So that's really how I'm gonna sort of price when I'm selling it, what I'm gonna look at. Now, the 300% margin of safety is for a cash liquidation. So if I can't sell that property for whatever reason, I know I can liquidate it at a 300% margin of safety.
Got it. Okay. But obviously you'd rather sell it on contract as option number
Yeah, I'd
one.
rather sell it on contract and make a much higher yield.
Do these deals I guess, vary or differ when it comes to, let's say it's a 100-acre parcel that could be farmed on. Are you doing anything different in that situation versus a 5-acre parcel that's more of a rec use?
Yeah, I mean, 100-acre parcel, I'm not going to get. That can be farmed. Bill Gates will buy it. Jeff Bezos will buy it.
Yeah.
So I'm just not going to get it. And I don't want it because the reason they're buying it is they're clipping an 8%, coupon on that property.
Right.
And so they're doing a completely different strategy. I want property that's going to be an hour to 3 hours from the nearest city that people could use recreationally. And it's very inexpensive.
Right.
And now here's a word from our sponsor.
Get things done while you're on the move. Learn more about working with a virtual assistant through Offsite Professionals. It's a great way to get all the things done that you need to get done. Have freedom in your time and streamline your life by automating your business. Stop spending time on the tasks that you can delegate and start spending more time on your superpower. Call us today at 503-446-3177 or visit our website at offsiteprofessionals.com.
Uptown Syndication is now offering a syndication coaching program for you to take your real estate portfolio to the next level. This is your opportunity to have experienced syndicators, AJ and Chris Shepard, coach you on your way to controlling your real estate investing future. Our coaching program will provide you with the tools and framework needed to begin syndicating real estate in your target market. Go to uptownsyndication.com today to learn more. What would you tell someone that's never purchased raw land before, aside from the process and how to go about it? Are there any red flags that they should be aware of when they are looking at getting into land deals?
Yeah, I mean, I think the big red flag is the mentality that I'm going to do a land deal, because one land deal is not going to move the needle for you. But the question is, do you want to be in the land business? Because if you can do this one time, you can do this a million times. And so are you prepared then to create a land business and create a machine? And so 90% of this business is automated with software upfront, inexpensive virtual assistants, and software on the back end. And if you are prepared to do that and you're entrepreneurial, then absolutely test the hypothesis of what I'm saying, buy a piece of land, sell that piece of land on terms, but then go ahead and continue doing it and make sure you don't build yourself a job. So I think the first red flag is don't build yourself a job. I think the second red flag is once you start doing it, don't let fear get in the way. So what I'll see our clients do is they'll buy 5 to 7 properties and then that's it. Like, I'm not doing any more deal flow until I sell those 5 to 7 properties. Well, a mailing can take 6 to 8 weeks lag time. And so they sell the property. Now they're a chicken company with no chicken. And so they lose out on the momentum because they stop their deal flow. The other red flag is people who just don't want to really learn the model. They won't go deep into it and they'll mess up with pricing and they'll overpay for whatever reason. I don't see that too often, but it can happen. And the next red flag is going to be environmental issues and due diligence issues. So if you go outside of the model and you start looking at areas like New Jersey, Ohio, Pennsylvania, you could end up buying a Superfund site. It could cost millions of dollars that you'd be liable for cleanup. You could go to a site like EPA.gov to mitigate that risk and make sure you're not buying a Superfund site, but that could be a risk as well. But really the biggest risk I see people doing is the fear-based risk of stopping deal flow.
And I'm assuming some of that fear comes from, maybe they can't sell the deal in 30 days or less using the strategies that you mentioned earlier. So do they just panic sell it and get rid of it? Or where do they go from there? If it's if it's taking longer than 30 days.
Yeah, if it takes longer than 30 days, hopefully they have confidence that it'll sell because they all sell. And it's just, having that resilience to get better at your marketing and learn it. So I don't see that happen too often. It's more that they're losing time in their business because of that fear. I don't often see, after 30 days, people just want to liquidate. I think they know instinctively they bought at the right price and there's money to be made. And they just need to be more patient in learning the marketing aspect of it and the selling aspect of it as well.
I was gonna say, if someone's buying, pennies on the dollar, and they do have to sell, the worst thing that happens is they make money now instead of over the next 60 months, right?
Yeah. So instead of, yeah, exactly. I mean, yeah, they can flip it for cash and make out, let's say 100%. They can
Yeah.
wholesale it. No one's going to complain. They're making their money on the buy one way or the other.
What do you think a realistic target for, maybe someone that's not familiar with the real estate industry? They come talk with you, and let's just say that they're a teacher, and a teacher wants to get into this on the side, to replace our income. What do you think a realistic goal in terms of number of deals in the first 12 months is? I know you had a pretty good first 12 months when you got started, but nowadays, what do you think a realistic goal is?
I mean, it's a really hard question to answer because there's so many factors that go into it. Let's take that teacher, for example. Well, how long are they going to work on the side doing it? Do they have 2 hours a day? Do they have an hour a day? How much capital are they starting with? Do they have $5,000? Do they have $50,000? What's their confidence level in the aspect of the learning curve? Are they going to have fear, or are they going to have faith that the process works and that they can continue doing it? Will they be able to invest money in team, even during times when they haven't sold property, because they know, again, that they're building a business? So there's so many different things that are going to go on in that learning curve. But I would say on average, if they give themselves 12 to 18 months of learning curve, that I would expect somebody who invests, say, $100,000 in the land to have $10,000 a month in passive income. Now, if they have $50,000 to invest in land, that'd be $5,000 a month in passive income in 12 to 18 months. If they have $20,000 to invest in land, that'd be $2,000 a month in passive income in 12 to 18 months. How that equates, is going to be different for everybody. But I really think that if you look at it from a business point of view, you want to give yourself a runway. So if I were starting a new business, I would say, look, I'm going to make this thing work, and I'm going to give myself 36 months. And if after 36 months it's not profitable and I absolutely hate it, then I'll quit. And if you have that kind of mentality, you can be like a hockey player in business, right? Because a hockey player gets their teeth knocked out and they still get up and they continue playing hockey because they love hockey that much. Yeah. That's kind of how you have to really be, I think, in any business, not just the land business, but just business in general.
Resilient. Absolutely.
You have to be resilient. You have to have grit. You're going to get knocked down and be like, okay, I believe this. Like, to 36 months to have total freedom is not that long.
Yeah. Yeah. So another question I had for you is, what happens if you sell it on contract and someone pays it off in year 2? Does that hurt your feelings? Are you excited about that?
I don't get excited about it, but it doesn't hurt my feelings either. Yeah, it's not. I don't want the cash. I want the cash flow. Cash is fine, but again, I want cash flow because that's the antidote to financial insecurity. I want to be able to know I don't have to. Next month I don't have to chase a deal if I don't want to. I can get sick, no problem. I can travel the world, no problem. And the machine's going to continue just collecting money every single day.
And when it comes to the machine, how does one go about managing? Let's say they have 10 deals that they're doing, and all of a sudden they sell all on terms. How does one manage all that? Because that, for someone that's really new to real estate, managing 10 different deals can seem daunting.
Yeah, so there's 2 software programs they would want. The first one is lgpass.com, and the second one is called geekpay.io. So lgpass, consider it like a CRM that helps you manage your 10 properties, taking you from acquisition all the way to contract. And then geekpay.io is a set and forget it note collection system, so that you set up once. If your borrower has a question, they can log in, they can see their current balance, they can make a prepayment. And so ultimately, The idea being that we can always make more money. We can't get more time. So anything that's going to save me time, I'm going to invest in.
Absolutely. And going back to my prepayment question, when you're negotiating these deals, are there prepayment penalties associated with them or no?
I don't have prepayment penalties.
But that, I mean, in theory, that's an option, right? Like you could
In
do
theory,
that
it
if
would
you
be an
wanted.
option. You could do it if you wanted, sure.
But then it goes back to the fact of, okay, well, the worst thing that could happen if they prepaid is you still make money, just not as much interest on the back end.
Yeah, exactly. Exactly.
So Mark, what are things that, what's the first step to get into this? They've heard the process, they understand, how to go about it, but what's step one if someone wants to get in and learn from you?
So if they want to learn, I think they should go to the landgeek.com and just start there and really start diving in. And, maybe you get a free course or maybe you read the book and just start getting educated and then make some tiny bets and see if the model resonates with you.
Speaking of timeliness, the real estate market right now is kind of weird. The economy is kind of weird. There's some stress in the economy right now for a lot of different people. Do you think timing right now has anything to do with or would be a good time to get involved? Or, are you just always being a buyer and that's what you're going to respond with?
I'm always a buyer. So if we look at the cycle in real estate, that at times that it's going to be easy to buy and it's going to be easy to sell. Let's call it equilibrium. There'll be other times in the economy gets really hot. It'll be harder to buy and it'll be easy to sell. And then let's say we have a recession, then it's going to be really easy to buy. Everything's on sale, but it might be harder to sell. But at any one point in that cycle, you're still in a good situation, especially if you know where you are at in the cycle. So even in 2008, 2009, 2010, I was still profitable as a land business. It really is going to be one of those things where you just adapt to the cycle. And because we're not using debt, it's not big money. We have this asset that, there's nothing to maintain, nothing to protect, nothing can't be destroyed. COVID, pandemics, hurricanes, you're not going to get knocked out of the game in this business.
I love how you said, because you're not leveraging, you're not using debt to make these purchases, your exposure is pretty much what you have into the property. And then I guess property taxes, annually, but
exactly. And the property taxes are pretty minor.
So this
and you
seems
should be able
like
to sell that property in 12 months or less. If,
true.
Then your borrower pays the property taxes.
So it seems like a pretty low risk business to start at the beginning, right? I mean, depending on what your budget is and all that stuff.
I personally think it's the best passive income model. If you could tell me something better, I'd love to know what it is. Actually, there's one thing that's better. Life insurance is better because life insurance is just an idea. So you don't have to go out and buy anything. But life insurance and land, it's a one-time sale, and then you get recurring income, and you don't have to deal with any real headaches when you're doing it. So besides life insurance, which again, life insurance has its own issues with, being competitive, and you go to a party, nobody wants to talk to you, that type of issue. But I would say land is the best passive income model.
Yeah, I'm trying to rack my brain, and I don't think that there are any other examples that would come close to what we're talking about today.
Yeah.
Especially for passive, even buying a single family rental, some people will say that's passive, but in reality, it's not passive at all.
No. And, when I say passive, it's not like you don't have to do anything, right? But once you've done the work, then it can be very passive. Once you've set up the machine, once you have your software, virtual assistants, and your software on the back end, you're just really just feeding a capital at that point and managing. Right. And if you don't want to manage, you can hire someone to manage it, like an acquisition manager. But Absolutely. In the beginning, it's not passive. So if you're listening to this, if I think I'm making it sound easy, it's not easy. It's a simple model. But honestly, nothing worth doing is easy. There's just no get rich quick that has any type of longevity to it. Not even crypto.
That was a pretty timely comment too, considering Bitcoin is testing all-time highs every single day now.
Yeah, exactly.
Mark, is there anything that we didn't discuss today, or maybe the listeners would like to hear from you before we wrap things up?
Yeah, I mean, if I'm a listener, I'm skeptical, because here's a guy, if it's so great, why are you teaching it? And I think it's a fair question. And so in 2010, I was on vacation, and this guy, Tori, called me, and he's on my website, and he's like, hey, I'm really interested in learning to do what you do. And I said, look, I don't teach this. And he's like, well, what if I pay you this? I'm like, oh, okay. So I'm like, let me get back to you. So I go to my wife. I'm like, hey, this guy wants me to teach him the land business. And she's like, why would you do that? You're going to create your own competition. So I said, good point. So I'm like, let's put on the investment banking hat and let's just see how big this market is. And it turns out there's billions of acres of raw land, and you literally couldn't think of a more boring real estate niche. Like, you're not going to go on HGTV or the DIY network and see flip this land. The before picture is raw land, the after picture is raw land. And so what I discovered was that as I taught Tori how to do this business, it was extremely gratifying because it changed his life. His first deal, he made $300,000. And so it was like, for him, life-changing money. And I got to a point where I realized that the land business for me helps me and my family, but teaching it is absolutely been my vocation, in the sense that there's nothing more gratifying than literally changing the trajectory of somebody's life and being that pebble in the pond. And that impact then spreads. It also affects all their relationships. And so I absolutely love that aspect of the business, and that part of the Land Geek is having that privilege and honor to possibly affect that type of change.
And I can tell that you mean that. You're very genuine when you say that, and you're genuine in things that I've seen, online and social media of you genuinely get excited to teach this to other people. And I think that's one of the coolest things about you. And for anyone that does want to take that step and go actually get into it, I think Mark is probably the best at teaching it in terms of, this land investment business. And like you said, it may not be sexy, but plumbers make good money and they deal with dirty jobs, and they don't have all the shiny stuff when it comes to what they're dealing with. But this is a niche in real estate that I don't think is talked about enough. Everyone wants to talk about syndicating apartment buildings and that stuff, which is what we do. But this is a niche that I think is great for people that want to build their own real estate business and start from ground zero.
No, 100%. And there's nothing wrong with syndicating apartment buildings. And you could even look at the land business as the gateway drug to doing those bigger, sexier deals so that people actually talk to you at the party.
Well, Mark, thank you so much for sharing about yourself and the Land Geek. We do have a link so people can go check out the book. And I will definitely make sure the Land Geek's website is linked in the show notes. Thank you so much.
Thanks, Trent. Appreciate you.
Thank you for listening to this episode of the Real Estate Professionals Investing Podcast on WIN, your community of investing knowledge for growth. We hope that this episode has increased your knowledge and added value to your path to freedom. If you would, please take a second to rate us so that we can get more great investors to interview. If you or someone that you know wants to be on, please visit westsideinvestors.com and fill out our form to be on the show. Thank you again, and enjoy your day.